Bitcoin, a revolutionary vision from Satoshi's white paper. In October 2008, as the world reeled from a devastating financial crisis, an enigmatic individual or a group under the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer to peer electronic cash system. This concise document introduced Bitcoin, the first decentralized digital currency, and ignited a movement that would challenge the foundations of traditional finance. At its core, Bitcoin embodies three defining principles: decentralization, censorship, and resistance, and a fixed supply. These features, meticulously outlined in Nakamoto's white paper, have propelled Bitcoin into a global phenomenon, heralding a new era of financial empowerment and technological innovation. Far from being a mere speculative asset, Bitcoin represents a bold reimagining of money, one that prioritizes individual sovereignty, resilience, and scarcity. The genesis of Bitcoin: addressing a broken system. Satoshi Nakamoto's white paper emerged against a backdrop of 2008 financial meltdown, a time when trust in banks and governance was at all-time low. In the opening lines, Nakamoto identified a critical flaw in the existing financial framework. Commerce on the internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. This reliance, Nakamoto argued, introduced inefficiencies, high costs, and vulnerabilities. Transaction fees eroded value, fraud remained a persistent threat, and the concentration of financial data in centralized institutions compromised privacy. Bitcoin was Nakamoto's solution, a peer to peer system that eliminated the need for intermediaries, enabling direct, secure, and cost effective transactions. The brilliance of Nakamoto's vision lies in its simplicity and ambition. By leveraging cryptographic techniques and a distributed network, Bitcoin offered a way to bypass the gatekeepers of traditional finance. This was not just a technical innovation, but a philosophical shift, one that sought to return control over money to the people. The white paper laid out the blueprint for a system that would achieve this through decentralization, censorship resistant, and a capped supply, each element reinforcing others to create a robust and revolutionary asset. Decentralization, power to the network. At the heart of Bitcoin is its decentralized structure, a radical departure from centralized models of banks and governments. Traditional currencies are managed by central authorities that dictate monetary policy, control issuance, and oversee transactions. Bitcoin, by contrast, operates on a global network of computers known as nodes, each maintaining an identical copy of a blockchain, a transparent, tamper proof ledger of every transaction ever made. No single entity holds reins. Instead, the network governs itself through a consensus protocol, ensuring that power is distributed among its participants. The decentralization offers unparalleled resilience. In a centralized system, a failure or attack on the central authority can cripple the entire network. Bitcoin, however, has no such weak points. Nodes span the globe, operated by individuals, businesses, and organizations, all working in unison to validate transactions and maintain blockchain's integrity. If one node goes offline, thousands of others continue to work, making blockchain remarkably resistant to disruption. This distributed architecture not only enhances security but also aligns to Nakamoto's vision of a trustless system, one where trust is replaced in mathematics and code rather than fallible institutions. Proof of work, engine of decentralization. Bitcoin's decentralized network is secured by a mechanism called proof of work, a process that Nakamoto detailed in the white paper as key to achieving consensus without central authority. In this system, participants known as miners compete to solve intricate mathematical problems. The first to succeed add a new block of transactions to the blockchain and is rewarded with newly minted bitcoins. This competitive process serves dual purpose. It protects the network from malicious actors and regulates the issuance of new coins. Proof of work ensures that altering the blockchain is prohibitively difficult. To rewrite transactions, the attacker must need to outpace the combined computational power of the entire network, an endeavor so costly and resource intensive that it's practically impossible. This security underpins Bitcoin's decentralization, as it prevents any single party from gaining control. Moreover, the system self regulates. The difficulty of the mathematical problems adjusts dynamically to maintain a steady block of creation rate of approximately 1 every 10 minutes. This consistency reinforces Bitcoin's reliability, making it a dependable foundation for a global currency. Censorship resistance, freedom in transactions. One of the Bitcoin's more transformative feature is the resistance to censorship, a direct outcome of its decentralized design. In traditional financial system, governments and banks wield the authority to block transactions, freeze accounts, or impose restrictions, often to enforce political agendas or economic controls. Bitcoin dismantles this power. Because no central authority governs the network, no one can unilaterally halt or reverse a transaction. As long as a user has an internet connection and their private cryptographic keys, they can send and receive bitcoins freely without the reach of any authority. This censorship resistance is a lifeline for individuals in oppressive or unstable environments. In countries with strict capital controls, citizens can use Bitcoin to preserve their wealth and access global markets. During economic crisis, when local currencies collapse, Bitcoin offers a stable alternative for storing values and conducting trade. Real world examples abound. In Venezuela, when hyperinflation ravaged the bolivar, people turned to Bitcoin to buy essentials. In regions where authoritarian regimes activists have used it to fund their efforts without interference. Bitcoin's permissionless nature empowers user, making it a tool of financial freedom and bulwark against tyranny. Fixed supply, the scarcity of digital gold. Unlike fiat currencies which central bank can print at will, Bitcoin is strictly limited supply of 21 million coins, a cap embedded in its code. This fixed supply outlined in the white paper mimics the scarcity of precious metals like gold, earning Bitcoin the moniker digital gold. New bitcoins are introduced gradually through mining, with the reward halvening approximately every 4 years in the event known as halvening. The predictable issuance schedule ensures that the total supply will never exceed the predetermined limit, a feature that sets Bitcoin apart from the deflationary assets. The implications of this scarcity are profound. In an era where central banks engage in expansive monetary policies such as quantitative easing, that devalue fiat currencies, Bitcoin offers a huge hedge against inflation. This limited supply means that as demand grows, its value has potential to rise, making it attractive long-term investments. This characteristics resonates with the disillusioned dis, This characteristics resonates with those disillusioned by the erosion of purchasing power in traditional money systems. By design, Bitcoin incentivizes savings over spending, positioning it as a store of value for a digital age. Bitcoin's broader impact, a financial paradigm shift. The principles of decentralization, censorship resistance, and fixed supply extend beyond Bitcoin's technical framework. They signal a seismic shift in how we perceive and interact with money. The blockchain's public ledger ensures transparency, allowing anyone verifying transactions and fostering trust without intermediaries. This openness, combined with those of pseudonymity of users' identities, balances accountability with privacy, a rare feature in modern finance. Bitcoin's influence has rippled across industries, sparkling a creation of thousands of cryptocurrencies and blockchain applications. Major corporations such as Tesla and MicroStrategy have allocated portions of their treasuries in Bitcoin, recognizing its potential as a reserve asset. Meanwhile, a vibrant community of developers, miners, and enthusiasts continue to enhance the ecosystem, driving innovations like Lightning Network, a second layer solution that promises faster, cheaper transactions without compromising security. These achievements address scalability concerns and pave way for Bitcoin's mainstream adoption. Addressing challenges with optimism. Bitcoin is not without its critics, but its strengths far outweigh its challenges, and solutions are actively in progress. Some point to the energy demand of proof of work, yet studies suggest that the significant portion of mining relies on renewable sources like hydroelectric power, and traditional banking systems is comparably resource intensive. Other highlights Bitcoin price volatility. As, a, as a, but as adoption expands and the market matures, fluctuations are likely to stabilize, transforming volatility into a opportunity for savvy investors. Far from being flaws, these aspects respect Bitcoin's growing pains as it carves out its own place in the world. A vision realized Bitcoin's bright future. More than a decade after its creation, Bitcoin stands as a testament to the ingenuity of Satoshi Nakamoto's white paper. What began as an experimental concept has blossomed into global movement, challenging the dominance of centralized finance and offering a viable alternative. Its centralized network ensures resilience and inclusivity. Its censorship resistance champions individual liberty, and its fixed supply provides a shield against economic uncertainty. Bitcoin is not such a currency. It's a philosophy of empowerment, a technological marvel, and a beacon of hope for more equitable financial future. As Bitcoin continues to evolve, its significance only deepens. It has transcended its origins to become a symbol of resistance against outreach, a tool for the unbanked, and a cornerstone for digital economy. The journey of Nakamoto's white paper to $1 trillion asset is a remarkable story of innovation and perseverance. With each passing day, Bitcoin solidifies its role as a revolutionary force, proving that a censorship resistant and a scarce digital currency is not just possible, it's thriving.